The NSE All-Share Index increased by 1.3% last week, pushing its year-to-date gains to 31%. However, the NSE All-Share Index is down in early trade today, right about 36,893 points, dragged down by industrials, oil and gas, and consumer stocks. And for more on what's moving on the markets, we'd like to now cross to the stock exchange where Oluwaseun Adesoye, head of stockbroking at Australian Asset Management, should be joining us. Okay, we are waiting for that link to the NSE, but while we do that, it'll be interesting to just look back at last week. A very interesting week. We saw particularly the brewery companies doing pretty well. A bit of a surprise given the fact that a lot of people suggesting that these stocks are overvalued. I think we have Seun at the NSE right now. Let's now cross to Seun Adesoye from Associated Asset Management. Seun, thank you very much for joining us. All right, it seems we have a challenge with that line. Hopefully we can get it back up in a little bit. All right, let's take a look at African currencies and hopefully we can get that link to the NSE fixed. The NSE now to talk us through the markets. Seun, thank you very much for joining us. So last week we saw the market do pretty well, up about 1.4%. But then, like I was making the point, the market is being lifted these days by companies that a lot of people suggest are a bit overvalued. I'm talking about the brewery companies, some of the consumer stocks. What's your take on this assessment of the interest in some of these multinational companies and large cap companies that a lot of people say are a bit pricey right now?
Yes, for me, it's expected that they will be pricey right now, considering the fact that there's still a little apprehension on the banking sector, which ordinarily is a major driver of the market. The priciness in the consumer goods is expected to still continue pending when the results of the third quarter results start coming out, which will give a reality check on the impact of the CRR on the earnings of the bank. Until then, I'm not sure there's any other sector that would be investors' delight. It's safe, it's defensive, and so you don't expect any less.
All right, so if that is the case, don't you think that we are setting ourselves up for a bit of a crash there? Many suggesting that a bubble is beginning to develop in these consumer stock names and the brewery companies, etc. Do you agree with that sentiment?
I wouldn't call it a bubble because there's always a natural correction. Right now, we'll see that the indices in that regard is coming down. And of course, there will be gains taken. Once the gains taken, it will correct itself. It will be a cycle that will continue for a while, but there would always be a correction in between. Investors are a lot wiser and they're, of course, thinking safety. So I don't think it's going to be a crash.
All right, so some concerns around the banks, but that said, do you still see value in that space?
Yes, I still see value in it because I believe that to a large extent, once the third quarter results come out and we see the impact, there's going to be a natural correction. The banks will adjust their models and at the end of the day, before the end of the year, we can see that, yes, we might see some slight drop in their earnings, but I don't think the impact will be so adverse considering it's the policies are coming towards the end. I think there's still a lot of gains potentials in the banking sector.
Right, so you think the banks are going to rise in the fourth quarter? I think you're perhaps the first person I'm speaking to that is that bullish. You get the sense that in the fourth quarter, those Q3 numbers will be the lift for the banking sector.
I believe that towards the end of the year, the banking sectors, the numbers are going to get better. Yes, we might not see a huge leap. There might be, like I said earlier, there might be a slight variance between the forecast and what we have. But by and large, it will not be I don't think it will be as bad as we envisage.
Do you think the takeoff of a new trading system or platform on the NSE is having any bearing on the market right now? We've seen a pretty bull run last week. I think that was a bit of a surprise for most. Do you think that is a factor at all?
Well, I wouldn't say totally it's owed to that, but of course, in talking to people, you can see that investors can get real-time reports and the results come in faster to them. They can get a real feel of the market. to an extent, you could say yes, it would inform their decision taking, and of course, they can begin to take informed decision faster, and you can begin to see the import. But until the volumes begins to reflect in the volume, I wouldn't totally owe the bullish run for last week to the new trading platform.
All right. If we look at about the last 2 years, we've seen a lot of interest in those consumer names, and as a result, a lot of people suggesting that the free float on those stocks is pretty low right now. And I just want to get your thoughts as a trader. And are those stocks available right now? If I wanted to pick up the likes of Nigerian breweries, Cadbury, compared to say about a year ago, are they available?
Well, it's a function of how much you're willing to pay. It's not like they're not, the free float, yes, may not be readily available. But if you're patient and consistent, yes, you will, so long as you're willing to pay the right price.
All right, of course, that has been the focus. That has been the focus of many, particularly foreign investors.
Yes, because
they
those
like
stocks, those stocks most times are safe, and you hardly see government policy adversely affecting them. So when you know that, okay, this stock, they've been consistent in their earnings, they have safety, they're defensive in their reaction and their volatility. Right. Everybody is very concerned about safety.
So if I wanted to take a little more risk here, which stocks should I be playing in? We saw Custodian and Allied report numbers on Friday. So perhaps the insurance sector maybe?
Well, it may not be a bad take. Unity Bank may not be bad. If you're willing to wait to see, we see the outcome of the 40 billion raised on Wema Bank. Right. We understand Unity Bank too is talking to some people. So if you're willing to take a risk, maybe you could do a Unity Bank, for example.